Hello everyone. In this video we're going to go over a simple Fibonacci trade. We're going to base that off of a simple Fibonacci, and what we're looking at is just the basic movement over the previous Friday, and just the simple movements that we're getting here in this ranging. We're going to look for this to continue here a little bit, and what we're doing is, as the market has come back up to this point here again in resistance, we're going to sell it back to the bottom of this range, and we'll look at price action if we get enough movement down once it gets down to this point here. So for now, our entry is short. We're going to look to play this range, and in the event we get some continuation, we'll be looking to try to hold this out on a breakout right down into the 37.70, 37.60 range here. Now that we have a new candle out here, what we're going to do is reduce our risk a little bit. And what I mean by that is that as the market is moving down here, we're actually reducing our risk, and now we're going to put a stop loss in here, because at the onset of the trade we didn't put one in here, and the reason is we wanted to see what it was going to do first here. We had a mental stop. If the market went back above this previous high point, we would have closed the trade at that point. But now that it's beginning to move down a little, we can actually reduce that risk. Our original risk was about 38 pips, and now that we have the high point of this candle, we're actually going to add to this position here now. Now the way this was calculated out, even though we've added to this position, we're still only risking 1% of our balance here, because 1% of our balance would have been about $816, and from that 38 pips, that'd give us about a $21 per pip trade we could make, but at the onset it was only set at 1.6. So now with a stop loss above this point, we have a smaller range, so we can actually increase the amount that we're putting into towards this. So now that we have like a 28 pip stop loss, and we're still only going to risk 1%, we knew that we could come back and add another $13 per pip to this, and ride this out. Now as it goes even more, we may decide to even add more to this, or start closing positions if we get down to the lower end of this ranging period here. One of the reasons we're only going to target this lower end of this range that we've been in over the last trading day is every time the price comes down to this range right along in here, what's happening? Every time it comes down into this point here, it's being bought. And we're not going to take the chances that it will happen again. So if it does, we're just going to take profits out at this point, and we'll leave a small portion of these trades running in the event that it does break out. So from here, we're only needing it to go a little bit further here, and we can begin taking profits out here. Now that the market's entering into this range, we're going to scale out of this and book some profits here. What we're going to do is we're going to leave a small portion of this running in the event that they can come back now and break through this previous support point. If they do, we may consider adding positions back into it, or just let this ride and book the profits that we have already here. Another option at this point is for the trade, what we have remaining here, we can go ahead and move to break even. This makes this pretty much a free trade now. Doesn't matter really what it does now. We've already booked our profits, and we can't really lose anything from this now. But we're going to leave this small portion running, see if they can break through this here. Because we don't want to fight the buyers. If they begin to pick up buyers again at this point here, we're not going to fight them. As soon as we see it begin to trade higher or something, we're going to go and close the rest of this as well. Now that we've let this run a little bit, we're seeing what we kind of expected to happen once price reached down into this support level. The ranging looks like it's going to be continuing here now because we're seeing price kind of push back out of this. So now the buying is taking over, and we're going to go the other way for a while. But in this trade, it's pretty much over anyway. What we have left running here is really not going to hurt, even if we move back to break even here. We've already put in the bank about 1.5% on our balance on the previous trades, regardless of what this does. Pretty much a free trade at this point. So we're going to let it ride out, and if this can't break or get into our break-even point, whatever we get for a high point here, we'll probably try to protect a little bit of profits here. But if not, it doesn't really matter at this point anymore. We're just watching price action now, looking for the next setup to occur. Now that we have the price moving back out of this range, what we're going to do is we're going to move our stop loss down and actually protect some of this profit that we have left running here. So we're going to come to right around the 38.90 range, I guess. Just so we can protect a little bit of the profits that we have left running here in the event that this does continue back up. So if it does come up, we'll let the market take us out, and we'll be done. We'll net right around a little over 1.5% on our balance. So regardless, it's been a good trade. With the market pushing up there, that pretty much takes care of that trade. We let the market take us out there and protect a little bit of profits. So that pretty much wraps up this trade. Now we're just looking for the market to reset, and we'll get in with another one. I hope you enjoyed this. Hopefully there'll be more to come. Thank you.